GST will roll out in July and not on the 1st of April, as was earlier planned by the government. That was the word straight from the Finance Minister Arun Jaitley himself. The Finance Minister also gave an important clarification as far as the dual control structure is concerned, which, remember, has been a bone of contention in every GST Council meeting so far. He said that the entire assessment base will now be shared between the centre and the states. So this is how it's going to work out. 90% of all assessees with a turnover of less than 1.5 crore rupees will be assessed by the states, and the rest will be assessed by the centre. However, assessees with turnover of more than 1.5 crore rupees, this is where it will be assessed in a 50-50 ratio by both the centre and the states, and it will be a computer program which will determine whether it will be the centre or the state that will be doing the assessment. Enforcement powers will vest with both centre and state assessing officers. The agreement made today will be incorporated in draft laws, and the modified draft laws will go before the GST Council on the 18th of February. And that is when the GST Council will be meeting again. And after approval from the Council, the draft laws will then go to the state legislative assemblies for their assent. Let's take a listen at all those developments that came in from the 9th GST Council meeting.
The entire taxation base will be shared between the assessment and machinery of the centre and the states. It will be dealt with in the following manner. All assessees with a GST turnover of 1.5 crores or less, 90% of them would be assessed for the purposes of scrutiny and audit by the states, and 10% by the administrative machinery of the centre. Those above a turnover of 1.5 crores would be assessed in the ratio of 50-50 between the centre and the states. Power to levy and collect the IGST taxation is with the central government, but by a special provision in law, the states will also be cross-empowered in the same manner of the ratio mentioned earlier. The ministers in the council then assessed a realistic date by when the three important things pending: final draft legislations and the rules, secondly, approval of these by the legislative bodies, and three, the fitment of the rates can take place. So I requested the ministers to give their opinion about the realistic dates. And there was a broad view that the 1st of July appears to be more realistic.
There were two opposite views. One was a vertical division, where both centre and state, from top to bottom, respective of size, divide the dealers for assessees. 50% for centre, 50% for state, or 2/3 for state, 1/3 for centre. Yeah. The opposite was there was to be a horizontal division. Below 1.5 would be entirely domain of state. Now, this was what the contentious issue. It is discussed in 5 council could reach an agreement. And today, to move to an agreement because central government agreed to concede two other points. One, territorial waters will continue to be the domain of the state. Two, IGST will be under dual control.
There were quite a few significant other decisions. One of the key decisions the centre gave in was relating to the territorial waters, definition of the state, the 12 kilometers which adjoin the coast. That now can be taxed by the state, which would mean it be part of the SGST, which is an important development today. That means 10,000 crores for the states, incidentally.